Today, Bitcoin slips to the $94,000 level. The Department of Government Efficiency sets its sights on the SEC, and Eric Chen of Injective Labs breaks down the current state of crypto markets. Bitcoin slid to the $94,000 level, Ether dropped 3.4% to $26.33, and Solana sunk 9% to $162. Now, taking a look at Mara Holdings for a moment, its stock fell more than 3% after the company announced this morning that it closed a deal on a Texas wind farm. Okay, let's talk about the top stories. Argentinian President Javier Milei is reportedly under investigation for a crypto token that plunged shortly after he promoted it in a now-deleted X post. That's according to Reuters, which reports that a judge will examine whether the president engaged in fraud when he praised Libra token. Now, the project claimed to stimulate economic development for Argentinian businesses, but data from Dex Screener shows the token lost more than $4 billion in value from its February 17th peak. A legal complaint was also brought forward by a local nonprofit group, calling it the biggest rug pull in history. Now, in response to the controversy, President Milei's government X account shared that the Office of the President would launch an urgent investigation into the launch of the Libra cryptocurrency, including businesses and people involved in its operation. In an interview with YouTuber CoffeeZilla, Kelsier Ventures CEO Hayden Davis claimed he launched the Libra token in what he said was a plan gone miserably wrong. He also claimed to be behind the launch of Melania Trump's meme coin. Next, the U.S. Department of Government Efficiency, President Trump's federal effort to slash spending, has set its eyes on the SEC. The department, which has strong ties to Elon Musk, shared a post seeking insight from the public on finding and fixing, quote, waste, fraud, and abuse relating to the SEC. Now, Musk has long been involved in legal battles with the SEC, including a lawsuit brought forward last month around his purchase of social media platform Twitter, which he has now renamed to X. The agency has also been a target for the crypto industry, which claimed the SEC was hostile to crypto businesses under the Biden administration. This is just the latest push from Doge to comb through federal agencies and look for ways to cut spending. The department has faced pushback in court, and now the Trump administration is contradicting itself on who leads Doge. An affidavit filed by the Trump administration in D.C. federal court claims that Elon Musk is a non-career special government employee and advisor to the president, not an employee at Doge, which the filing says is a separate service from the White House office. This is at odds with the November announcement from the Trump transition team, which said that Elon Musk and Vivek Ramaswamy at the time were tapped to lead Doge. Now, we reached out to the SEC for comment, but didn't immediately hear back. Last, the defunct crypto exchange FTX is set to make its initial wave of payments to creditors as its bankruptcy saga comes to a close. FTX is working with distribution partners BitGo and Kraken, and to receive a distribution, creditors need to complete a few steps like getting KYC verified, submitting required tax forms, and onboarding with distributors. FTX says separate payment dates will be announced soon. All right, let's jump into our main story. Last week, Crypto World's Tanea McKeel spoke with Eric Chen of Injective Labs. They talked about the state of crypto markets and his outlook on where investor demand goes from here.
All right, Eric, thank you so much for joining me on Crypto World today. Let's start broadly. What is your view of the market at this moment in time? We saw the big post-election rally at the end of last year, saw a bit of a meme coin craze last month. How would you characterize the market so far in February?
First of all, thank you so much for having me, Tanea. And I think for the past month, ever since an inauguration, there's been a lot of very much positive sentiment following the overall market, and also a lot of volatility that comes with it for both the crypto and also the macro market. And given the heavily correlated nature of crypto market with the macro condition at the moment, I think we're going to see some choppiness and some, like local volatility for the next month or two, given that there's still going to be a lot of optimisms, but at the same time, there's going to be, oversaturation of excitement coupled with, perhaps potentially some drops here and there that, causes some concerns with the market participants.
And I'm kind of curious about where you see demand going from here. And I'm not talking about prices of Bitcoin or Ether or altcoin this time, but, Injective, as I understand it, you guys are working to enhance traditional finance with on-chain crypto rails. Break that down a little bit more for me.
I think what's really, really exciting for the upcoming administration and the overall friendliness towards the industry as a whole adds a lot of regulatory clarity and also a lot of friendliness towards establishing licenses and also a more collaborative environment with regulators on launching a lot of very exciting products. So even from our side, we've managed to get out AIX index and TradFi indices that signals a major step towards the global overall seismic shift towards a financial industry that are merging with the overall crypto world. And I think with Charles Schwab also announcing that they'll be offering 24/7 trading for retail investors, it's all coming into a very, very interesting kind of hybrid between a crypto world that are offering more traditional exciting equity opportunities for a global audience, and also the US TradFi world trying to expand upon their product and improve upon it. So I think for the upcoming year and for the next few years, we're going to see very interesting competition between a lot of the crypto native or Web3 offerings that are trying to compete with a lot of the traditional financial products and maybe add some sparks to it.
Who exactly would you say, at least for now, these hybrid products are for? On the surface, it kind of seems like they're for a pretty sophisticated crypto investor that is comfortable with crypto rails and wants to diversify a little bit into more traditional assets. Who is it for?
I think that's a very interesting question because oftentimes when we're in the US, we forget how easy it is or how difficult it is, on the other hand, to onboard to various stock brokerage platforms, different type of brokers and stuff like that. Or, it's probably even bundled together when you're onboarding with your bank. They try to sell you, like some like brokerage platforms as a package deal. But in reality, it's a good demonstration of a standard user experience when you're trying to onboard to a crypto platform as a US person, because that's the exact same type of cumbersome user experience that you'll encounter if you're trying to onboard into any type of brokerages overseas as a global audience. So this means that if you want access to US equities and stuff like that, or go through a broker, it will be a very painful search process. It will be pretty time consuming and going through a lot of hoops and also verification steps. So I think that's what really makes it interesting, because it introduces a low friction, low barrier access towards these type of like global audience and global investors to this US based financial industry via this very, very novel and innovative crypto rail.
What is standing in the way of adoption of hybrid products like this? And I think that is phrased a little bit negatively, but obviously there is a learning curve here. What would it take to see a rise in demand for hybrid products like that, especially this year, given that in the US we have such a crypto-friendly administration?
Yeah, I think in general, prohibitive regulation could stand in the way of adoption for a lot of these hybrid products, as we've seen in the past, where a lot of the regulatory uncertainty kind of prevented a lot of these products, seeing the light, or prevented these products from progressively acquiring licenses required to operate both overseas and onshore. And on another hand, I think it's also about the various user experience and efficiency of the rails for the overseas local audience to access. So some of them could have a difficult time, accessing various crypto rails, et cetera, depending on a local jurisdiction. But some of them, might have a much easier time compared to US folks trying to access the same rail.
Okay, so to kind of summarize everything, where are we right now in the convergence of traditional finance and decentralized finance? And, as you know, the president's executive order on crypto focused on digital finance. These two realms of finance, they have always been separated. And in recent years, you have seen both sides really working to kind of get closer together. We have Bitcoin ETFs, for example, and then we also have tokenized real world asset funds on blockchains. So do you still see that separation? Has that convergence fully happened yet? Or is there still a little bit of a gap? And learning and education curve to overcome?
I think we're at the beginning of a very beautiful convergence. We have seen a lot of promises. We have seen first experimentations. We have seen some of the initial products, a lot of crossover. I think BlackRock recently launched a product on top of Solana as well. And this is going to be, looking back, a first sign of a fundamental seismic shift toward a very strong convergence between the DeFi and TradFi realm.
And then how do you at Injective hope to benefit from this new pro-crypto administration that we have here in the US? They're committed to getting so much done for this industry, and they have been moving faster than I think a lot of people actually anticipated. What is at the top of your wish list in terms of regulation or policy change?
I think quite a few folks on our team has been fairly vocal and fairly active in terms of working with regulators on coming up with the most productive regulation and also, upcoming guidances for the overall industry and just, showing our voice. And us at Injective Labs and also, for the greater Injective ecosystem, our goal is to basically enhance traditional finance with all these on-chain crypto primitives and rails to be able to enhance them and reach a globalized scale. And a lot of these indices that we recently launched, and also a lot of these very interesting traditional financial products are being deployed on top of the Injective blockchain. They're all a sign of a larger seismic shift for this convergence.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.